All right, guys, another great episode of PFREI, a passion for real estate investments. I'm your host, Juan Bilal, back again with another great guest, my good friend Jay Malik. We travel in the same circles and masterminds, and I wanted to get Jay on. Jay is actually, as he was explaining to me, a retired real estate investor and now a full-time accountant. So we'll continue to talk about the story. He just told me he had his first piece of land when he was 19 years old. Pretty impressive. And let me just give you a quick background about Jay. Jay is an author and speaker specializing in matters for dentists. He is an inventor of the Rich Dentist System, an integrated set of protocols to help dentists achieve a fulfilled life without anxiety about money. His practice as a money coach, accountant, tax strategist, and wealth advisor serves dentists through the U.S. and has helped them implement the Rich Dentist systems to achieve a stress-free life. One that is prosperity-driven ultimately leads to financial freedom. Well, actually, one that is prosperity-driven and ultimately leads to financial freedom. So I'm going to stop there because he has like 4 more paragraphs in his bio. So we'll let him take the reins. But I definitely appreciate you coming on, man. And I like your personality. Every time we're in the same circle together, you always light up the room and the life of the party. So I wanted to bring you on and share some of the knowledge that you have in real estate investing, but more importantly, accounting, which people often make the biggest mistakes. And I always hear, if you don't know your numbers, you don't know your business. So we'll start off with that, about the accounting. What made you switch? Talk about a little bit your real estate background, and then what made you ultimately switch to the profession that you're in now, being the numbers guy.
Okay. I actually always, soon after my what is called high school here, I completed that and I started working. I grew up for extended period of time. My family was homeless when I was younger. So I was always very motivated, and I saw that people who had money, especially back home, in South Asia, real estate is the thing. People who had money, they also had real estate, and money went together. So that got linked in my head. So I started working, and I always I like numbers, so I always work with numbers and money. And my whole career, I worked with small business and accounting and finance and all that. So I started, as you are saying, my first land I bought in when I was 19, and I developed actually a poultry farm shed on it. I built it up there. Later I sold it. So then what I used to do was all those years up to age 30, I used to actually develop. I used to buy a piece of land, put a house on it, what they call spec homes here these days. So I used to do that. I did that for a while. Then about 25 years ago, I immigrated to the US and started my life all over again. And again, real estate has been a part of my life. I owned single family rentals and rented them out. I joke about it, but it's kind of helped me a lot. I sold 4 of my rentals, which I had all of them at that time in 2000, end of 2007, early 2008. So I missed that just steep drop. I could claim that was my genius, but it was not. It just things like happened. I wanted some money. I wanted to get out of it. So I did that, but that worked very well for me. So since then, I still keep doing this. I have, nowadays, I just keep some cash handy. If a good deal comes along, I invest and get my profits through that and do this. And as I've grown older, I don't want to go and paint the houses and clean the kitchens and all that stuff. So I don't do that as that way anymore.
Got it. So now you're just watching the numbers for high-level professionals, so that they actually do invest into real estate. Some of these busy professionals that you do accounting for, they're now diversifying, a lot of them, out of the stock market into alternative assets. So let's talk about that a little bit, about the accounting that you see on that end. Not so much with the busy professionals, just in general. If you can give us the mistakes people make about not watching their numbers. How is it important, from your perspective, to understand your numbers when you're doing real estate investments or any investments for that matter? And what are some of the things that people should look about that they often miss?
Well, the real estate is that almost all of the uh, people I work with, most of them are dentists. Uh, these days, we market our firm only to dentists as well, but I still have some MDs and some chiropractors, and some other businesses. Almost all of them have some involvement with real estate. Uh, at the least, they own their own building in which they have the practice, and I help them buy that, negotiate that. And then some of them actively invest in real estate. What I have found is that real estate is, I mean, as somebody had said some time back, at some time in the past, and this thing has been repeated a lot, the real estate has helped more people become millionaires in this country than any other industry. That is, to me, it appears that is correct. Real estate is very profitable if done right. Unfortunately, the other aspect of that is it has also bring in a lot of people who are just selling, trying to convince people who are motivated to buy real estate, their programs and stuff like that. And some of that, what they teach doesn't work. Some of them have themselves not invested in a long time. They don't even know. So they're only info marketing people in just marketing the stuff which does not work. However, a lot of it works well if you implement it. And there is no alternate for hard work. If you work hard in real estate, you can make money. You have to be smart in terms of number. You have to be able to track your numbers well. And not only track, you need to be able to project your numbers well. Because as you know, in real estate, cash flow is always, although cash is king, but sometimes it is not positive for some time. If you don't control that well, very soon you're out of business. That's one thing I noticed. The other problem I noticed with new real estate investors, especially, is that they don't keep reserves for eventualities.
Good point.
That is another thing which I say causes them problems, gets them in trouble. Another thing which I see with real estate is that people are scared. People invest like in one home and rent it out, for example, and that doesn't work well. And then they get scared, and then they are out of there. I'm never going to do it again. This is bad, and that I see a lot. Now the problem is they should not have done that in the first place. Okay. There are other. I mean, if you want to invest in single family, you need to have more than one. Probably much more than one.
Yeah.
So that can balance out when one is vacant or the client moves out or there is a big repair bill, the others can carry that. They don't do that. Or if you just start somewhere, you have to like move up to that level pretty quick. If you don't, if you stay at 1, 2, it becomes hard to manage it. And then there are other ways to invest in real estate. You don't have to buy and hold now. There are real estate funds which you can invest through. There's a lot of opportunity in there for that. And there are different sectors in real estate, of course. I've also noticed that many people don't realize that you can just be a lender in real estate. Just with a bank and, get similar returns.
Yeah, that's all good stuff, man. And you see a lot of these people watch these HGTV shows, and the guys say, "I bought the house for 100. I put 50,000 in construction. I sold it for 200. I made 50,000 profit." And they don't account for the tax. They don't account for the holding costs. They don't account for any of that. That 50,000 number can actually be 15,000. Once you calculate all the tax and the holding costs and everything else. So I think a lot of people make a lot of big mistakes from that. I mean, I've been doing real estate for 20 years. I'm excited about it. It's very challenging. It's fun. It's exciting. It's all of the above. But, you have to really know your numbers and understand what a deal looks like, break it down. So having people like you who understands the accounting part of it, when you have your clients say, "Hey, I want to add this investment to my portfolio," Like, what goes into that? I know step one is the money first.
Yeah.
And then step two is the consultation.
Yeah.
What goes into that if one of your clients come to you and say, hey, I want to go out and buy 10 properties, or I want to go and, buy some notes or invest in this fund. Like, what does that look like? What does that conversation look like?
I ask them, the first question I ask people is that, okay, so what do you know about it? What have you learned so far about it? Share with me that. That tells a lot. Whether they are serious about it, whether they have put their time and effort in learning and what they know. So that is the first step. The second thing is important is, okay, how many people you have spoken to about this? How many people do you know who are doing it in your circle? Okay. And sometimes they say yes, sometimes they say no, but that is important. It's important to hang out in these circles so you know. For example, I mean, I mean, the thing is that, okay, I'll buy cheap, buy low, sell high will be work well. Yeah. But these days you can't buy low. Okay. So whenever you are buying, it's hard to buy low. These days you're buying at pretty much close, like higher prices. It's not soon after what it was up to like 2010, 11, 12, 13, 14. It's not there. Real estate has been going up for a long time now. And now we have actually, in some markets, we have crossed the 2008, 2007 prices. So if they have not done it, if they've not done their research, if they're not worked with it, that if they're not hung around people who do that, that tells me that they are not ready for it.
Yeah.
And the other part is that I think the easier method could be, if somebody who does not want to do this, could be investing in real estate funds. On the publicly traded side, there are REITs there, which are just like any other mutual fund, different vehicle. Those can be used. And on the private sector, especially if you are an accredited investor, which means your net worth is more than $1 million, or one of the tests is that, then you can invest in the private funds. That's how you learn that, and maybe once you learn that, you become more interested, and then you can go and do that. But key thing is learning, understanding what you are getting into,
and then knowing that the tax implications also. I mean, if you want to go out and buy a property and flip it, you can trigger some capital gains that and these business professionals already have a lot of taxes to pay because they make income. So having that understanding of long-term investments versus short-term capital gain investments is important also. You want to talk a little bit about that?
Yes. For example, I mean, I'll address the flipping part first, which you everybody knows about from HDTV. Is that if you are in the business of buying property and upgrading them and selling them, you are treated as a dealer. So it's not capital gains at that time, it is your regular income tax. You pay tax on that at regular income tax rates. So it's important to have that, have that in mind and understand that. And there are ways to, for example, if you are a buy and hold investor, there are ways to do that. For example, if you track your activity pretty good, and you keep track of your hours which you spend in real estate, and there are some other methods as well, which you can use to then, balance your real estate because real estate does throw losses, paper losses, not real losses, paper losses most of the time. And you can balance your other income if you have other income from against those. So, I mean, all these things, there are emptying of techniques which can be used. Again, it requires some level of understanding, education, working with people who know what they are doing. That is the key. I always believed that if you work with people who know what they're doing, there's much more chance of success than just winging it or doing it yourself. I also unfortunately see many people who come to me, they have tried to do it I can do it. I'm a smart guy. I mean, if these people are making money, I can make it as well on my own. That actually gets them in trouble.
Yeah, it's weird how I've actually had some people come up to me and say, "Hey, I'd love to do what you do," and it's amazing sometimes, but the way you get used to it, it becomes a habit for us. We make it look easy. They don't see the behind the scenes challenges, and I almost want to start a Facebook campaign to show all of the challenges, so people probably just like demotivational.
Oh yeah.
See
I
the
mean,
adversity.
I've known you for many years, so I know that you wake up at 4 o'clock in the morning,
Yep.
right?
Yep.
And you work the whole day, and you think about it. If you ask me, even if I'm be making more money, me to wake up every day 4 o'clock in the morning, I'm not going to do it. I mean, that is the reality, right? And there are many. I'm sure there are many people in the world like me.
Yeah.
So we can't really go by Furqan is making money into it. I should be able to do it because I'm smart. I mean, well, okay, I'm smart. Given that's fine. But I mean, can I do what he does on a daily basis? Plus, over the last 20 years, the relationships you have built. I mean, today starting, I can't replicate that. All
That's
the
the most
contractors you
important.
know, yeah, all those different people you know. The other thing is all the mistakes you made and the money you lost on those mistakes. I mean, there's no way I can buy that. So for me, the best method might be, if I love Furqan so much, maybe my idea, okay, Furqan, how do we get partner up? I have money,
Yeah.
where do I put it with you? And let's do, so you make something, I make something. And then along the process, I can keep learning. If I get a stage where I want to, maybe I can do something more or not.
Absolutely.
Yeah. So I think that is the best method, which I think is more effective than trying to, because it's a whole big, think about it, there are schools in the country where people are doing MBAs in real estate. I live in Fort Lauderdale, and near me in Miami, there is a master's program in real estate, and many of the schools offer master's program. So it is a full-fledged profession.
Yeah, we call it leveraging human capital, right?
Yeah.
Basically, partner up with someone who's experienced and learning as you go and implementing some of those things. So, as an accountant and doing these books and helping people strategically either save money or move money around so they don't have these big tax implications. As far as getting back to the real estate, what are some of the, if you can share with us, like one or two little tips which somebody can take to their accountant that would help them out? If they're flipping properties or they have rentals or making these investments, something that you notice that a lot of people miss. If you give us one or two jewels from an accounting perspective, because the end of the year is coming up, people are hopefully preparing and planning. So when they go into next year and filing taxes, something that they should definitely mention to their accountant or CPA to look out for that would help them.
Sure. The first thing, and the very basic thing, it's very basic and it's surprising how many people don't do it. The first thing is to have good books, records, contemporaneously created, which means while the project is happening, while the things are happening, the record should be kept contemporaneously at that time. These days, with all these electronic systems available, it's not as difficult. Okay. The other thing which that does is that gives you current right now where you stand with that project. Whether you are ahead or you are behind. If you are ahead, how far you are ahead. And then you have, okay, what will be the tax implication of that? So if you keep all your receipts together in your shoebox on your shopping bag and take them on April 10th to your accountant and say, hey, now file return, there's not much they can do for you. So at that time, they have to just take that whatever you gave and put the numbers in there and just file. Okay. But if you do it, there are two benefits. One benefit is, of course, the tax benefit. The second is that you are able to run your business right. The second thing is the entities, how you do the business in different entities. That is important. If you have any significant amount of real estate, you need to have it in different entities, of course. But how those entities are classified and how you use them, how you run money through them, that makes a huge difference. So that is, and these are things which I notice most people don't do or don't realize. It's not enough that you have each property in a separate LLC. Although I also dispute sometimes why should you have each property in a separate LLC, but that's a discussion for another day. So it's not, that doesn't cut it when it comes to your financial situation and saving money on taxes. How you manage it, set it up right, that is important.
That's awesome. Definitely appreciate you coming on the platform and sharing your wealth of knowledge. I want to give you the opportunity now. If there's any busy professionals, dentists specifically, that will catch eye of this podcast, definitely reach out to Jay Malik. If you want to give your contact information and just give a quick plug on your specialty, that would be great.
Yes. So I own a dental firm. We do money coaching and tech. My specialty is tax reduction. So we do it, as far as new clients are concerned, we work with dentists only these days. And the office is here in Fort Lauderdale. My phone number is 305-563-6000. Again, 305-563-6000. The email address is jay@jaymalik.com. Jay full written out, Jay, at my full name, jaymalik.com. That is also my website. One can go and learn about me and see my beautiful pictures there and all that. I'm not very pretty. I want to do that.
I'm loving the bow tie, man. That's
Thank you.
Nice.
Thank you.
Oh man, I'm getting a little jealous over here. I gotta fix myself together. Get myself together. All right, thanks a lot for coming on the platform. Another great episode of PFREI, a passion for real estate investments. I'm your host, Fuquan Bilal. Check us out on YouTube, Twitter, and Instagram. Thanks for tuning in. I really appreciate it. Thanks, Jay.
Thank you very much.
All right, have a great day, man.